A $35 billion volume TradFi giant just entered crypto, and they're coming for Binance's crown. Multibank Group. You've probably never even heard of them, but they've been quietly building a financial empire for 20 years with millions of clients worldwide. And while exchange tokens are having a moment right now, for example, BNB hitting all-time highs, BitGet's token is up 8x this year alone, OKX surged 6x just last month, and Gate.io's token doubled this year. Multibank is launching something completely different. They're building a 4-pillar ecosystem that bridges traditional finance with crypto in some very unique ways. We are going to get into those ways in this video. I'm going to cover what Multibank actually is, what they've been doing, and what they have on the upcoming roadmap. So let's take this back 1 second. What the hell is even Multibank Group? Well, this is a company that was founded back in 2005 in California, long before Bitcoin even existed. Now, for nearly 2 decades, they've built a pretty large global brokerage business, becoming one of the world's largest financial derivative institutions. We're talking about over 2 million clients across more than 100 countries. I mean, just their daily trading volume averages over $35 billion. Just to put that number into perspective, that's more than the entire daily spot volume of most major exchanges combined. Crazy to think about. They actually operate under 17 different financial licenses across 5 continents. We're talking Australia, Germany, and the UAE, for example. And actually, in the first half of 2025 alone, they posted $209 million in revenue, with about $170 million of that being profit. But I know what you're wondering. Why does a TradFi giant with a massive cash cow business even bother with crypto? Well, let me explain to you why in just a second. But first of all, I do want to be real with you guys. The reason I can bring you this deep dive is because Multibank Group has partnered with the channel to help get the word out about what they're building. They didn't ask me to shill you guys anything at all, just present the facts in an objective way. So that's exactly what I'll be doing in this video. All right, keeping things, well, you could just simply say no BS. So again, why bother with crypto? Well, I think the answer is because the Multibank team just simply sees the writing on the wall, right? You'd be crazy not to want to capitalize on this new market if you were in their position. I mean, just think about the insane adoption crypto is set to gain over the next 5 years. I mean, we're expected to 4x the number of users, which is faster than the rate the internet grew back in those early 2000s. So they're not just dipping their toes in, they're building an entire ecosystem designed to bridge traditional finance with this new digital emerging market. And they're structuring this plan of attack around 4 main pillars. Pillar number 1 is their legacy business. This is the Multibank TradFi. Now, this is the core brokerage that's been printing money pretty much for the last 20 years. This is Forex, stocks, commodities. It's essentially the engine that funds everything else. So you can kind of think of this as the way in which they're able to continue growing their endeavors into crypto. It provides the stability, the capital, and those 2 million strong users. In terms of the market size we're talking about here, well, it's the global Forex and derivatives markets, which obviously run quite high. We're talking into the tens of trillions annually. So Multibank's TradFi pillar is sitting on a business that already moves massive flows, which gives them a strong foundation, again, for endeavoring into crypto and even into RWA, which we'll talk about here very soon. Pillar number 2 is their MEX Exchange. Now, this is their upcoming institutional-focused network. So you can kind of think of it as an exchange purpose-built for big players, funds, and institutions in both Forex and in crypto as well. So according to Multibank's own press releases, actually, their MEX Exchange was actually valued at a crazy $23.7 billion by a reputable consulting firm named Arthur D. Little. Now, that's obviously a very, very impressive number, but it is important to note that this valuation hasn't been independently published or verified by Arthur D. Little themselves, at least not in the public record. So it's a claim definitely worth mentioning, but also take it, in that case, with a grain of salt. So again, remember, this pillar, this focus point, is squarely aimed at institutional demand, those hedge funds, family offices, asset managers who need that deep liquidity, who can't buy $1 billion on the open market because it'll just throw markets out and crazy. They want low slippage. They need large order sizes, strong regulatory infrastructure, and all the rest of it. And so this is why Multibank have created the MEX Exchange, because it is a different ball game to us regular retail folk. And so, of course, this can also bring in a lot more revenue as well. Pillar number 3 is Multibank IO. This is their fully regulated crypto-specific exchange. It's kind of their direct-to-consumer crypto play, which is basically what retail, which is what we are, will use. They're offering over 60 different spot pairs, derivatives with up to 125x leverage, and even institutional-grade security through partners like Fireblocks. Now, this is where they're going to bring their 2 decades of exchange building experience into the crypto retail market. But here's where things turn up the heat. Pillar number 4. This is Multibank IO's real-world asset marketplace. Now, they've even partnered recently with MAG, which is a massive UAE real estate developer, in a $3 billion deal to tokenize high-end Dubai properties. We're talking about places like the Ritz-Carlton residences, for example. The goal is to give people fractional ownership of real, tangible, high-value assets. So, for example, rather than you saving up enough capital to put a $200,000 deposit on a property, you could instead invest a fraction of that and have exposure to the same assets. Their goal with this 4th pillar is to tokenize over $10 billion worth of assets. Now, just to give you a sense of that scale, the global real estate tokenization market is worth right now around $250 billion in 2025. And it's projected even to hit around $4 trillion by 2035, according to Deloitte. But, and this is key, liquidity and tradability are major sticking points in real-world assets. So despite the fractional ownership and secondary market promises, many tokenized real estate assets, especially commercial real estate, do see low trading volumes right now, long lockup periods, and very few actual exits. So platforms often do struggle with fragmented buyer pools and regulatory friction. So Multibank's real asset marketplace aims to solve this by offering more fluid secondary market features and a working infrastructure with partners to ensure fractional tokens can be bought and sold more easily. So just simply, they're looking at solving the existing problems with the real-world asset market. As great as it is, again, it's a new type of industry. There's a lot of teething to still happen. Okay, so how do all these 4 pillars really tie cohesively together? Well, it's going to be done with their native utility token, MGB. You can kind of think of it like Binance's BNB token, but with a few critical differences. First of all, the standard exchange utility is actually there. So basically, you can use MBG for trading fee discounts and to boost your account tiers. Second of all, you can even stake it for rewards and get priority access to new token sales and real-world asset offerings on their launchpad. But here's the most unique part, at least in my opinion. MBG is designed for institutional settlement on their MEX exchange, allowing for these large players to use it on-chain for margin and even for settlement. Now, when that actually comes into place, that's going to create a lot of possible demand for the MBG token. Also, most importantly, it's integrated directly into their RWA marketplace. So you can actually use MBG to access these tokenized assets and even revenues from these real estate deals that contribute to actually a buy and burn program. Speaking of which, I think it's pretty important to mention, they've actually announced a $440 million buyback and burn program with the goal of burning up to 50%, yes, that's 50, of their total supply over the course of time. Now, they've already executed their first burn of nearly 5 million tokens back in August of this year. Pretty impressive stuff. All right, we all love buyback and burns, so this, of course, is a big up, especially as new retail flows in. That's the sort of stuff they like to see, right? Now, all that aside, their initial MGB token pre-sale, which was about 7 million tokens, actually sold out in under 1 hour, which is pretty impressive, at a rough rate of about 35 cents each, raising themselves roughly $2.5 million from investors. So they aren't just hoping for demand to magically increase. What they're trying to do is essentially engineer scarcity. You can even kind of see this on the charts, right? Multibank right now is sitting at around $1.15, which is up roughly a 4x from when those pre-sale investors even bought in, which is a lot better than other coins, which pre-sale investors got in maybe even 100x earlier than the current prices. So it's obviously a pretty good start, right? But Multibank is still considered a small cap by my means, right? It's under $100 million market cap. So prepare for some volatility, I think, until we have full-blown alt season, when some of these smaller cap coins like Multibank along that risk curve will have their explosive growth and potential. So all in all, what's their competitive edge here? How does Multibank separate themselves from other exchange and real-world asset projects in crypto? Well, very simply, it's got a lot to do with credibility and regulation. Now remember, they have a 20-year track history and licenses in multiple jurisdictions, including Australia, Germany, and the UAE. They're also not starting from zero, right? They have those 2 million existing TradFi clients they can systematically onboard if they wish, and $35 billion in daily volume. So they have the money and the manpower. It's a really, really good start. And it's important because the value of their ecosystem isn't just tied to the crypto market speculation. They've already got billions of dollars in tangible revenue generating real estate as well. So they've got their paws in so many different areas. Launching into crypto really for them is a side quest. And it's a side quest that's also going to bring us crypto investors who want all these coins to go up in price. Okay, we're actually getting the good end of the stick as well. Again, all those users, all that money can much more easily now find its way into crypto. So it's a win-win. But look, let's be realistic here. This is not a guaranteed home run. This is still a massive, ambitious undertaking with a lot of potential challenges, even for a massive TradFi company like Multibank. I mean, just think about it, right? Tokenizing $3 to $10 billion worth of real estate is a monumental task. And of course, as we know, all right, market competition in the crypto exchange space is actually a battlefield to say the least. So while Multibank has the capital and experience, they're still going up against some strong players, and their success depends on their ability to execute this 4-pillar vision, I think, flawlessly. But truth be told, okay, despite all of these possible challenges, the sheer scale of the project that's coming into crypto, so Multibank, I think is showing because we've seen a lot of people start to pop this up on their radar, right? So guys like Altcoin Daily, for example, Coinsider, and even Miles Deutscher are covering what Multibank is actually building here. So overall, I think it's still one of the most interesting examples of a traditional finance giant making a serious calculated move into crypto. I mean, after all, guys, it's just going to end up allowing more people to buy altcoins, which means pumping out bags. All in all, I want to know what you guys think. Is a regulated TradFi giant like Multibank what the crypto space needs to achieve mass adoption or not? Obviously, I think it's a pretty important, massive first step. So thank you all for watching this far. And if you made it this far, don't forget to leave me a like down below. I really do appreciate it. And thank you again for Multibank for also partnering with the channel on this video. It actually goes a long way to help support me creating the most high quality crypto content. So I really do appreciate it. And again, thank you guys for watching. I'll talk to you all in the next one. Take care. Bye-bye.